Now that we've got our accounting equation locked in and loaded and ready to go, we're going to start looking at different business activities that will affect the accounting equation and what we need to do with those. So this is an accounting record, and there's a couple different pieces to this record we need to understand. The first are those things in red, which is our accounting equation of assets equals liabilities plus owner's equity. Every single account that we use will have an account type. So they're either an asset account type, they're either a liability account type, or they're either an owner's equity account type. In green, we have the actual account titles for the specific types of accounts. So cash is an account title for the account type of asset. Kim Park Capital is the account title for the account type of owner's equity. And then below that, in blue, we have the account balances. So right now we have $0 starting in every single one of our accounts. In accounting, we're going to have what are called transactions, and these are anything that's going to affect a specific account. So we're going to be given different transactions, and then we're going to have to figure out how to record those transactions and then interpret and analyze those transactions, and we'll be then creating those financial statements from our transactions. So the transactions are what affects an account, and actually they're going to affect two accounts or more because we always have to be in balance on both sides of our accounting equation. Sometimes we're going to see the word on account used, and that means that we're paying for a service at a later date. So if our transaction uses the wording on account, that means we're paying typically at the end of the month. This is what would happen if we used a credit card. In the olden days, this phrase actually comes from when people would say, oh, just put it on my account. There are still certain stores that hold accounts that you can go and you can buy stuff and they just charge it up on your account with the store and then you pay the store at the end of the month. For example, here in Dodge Center, Sunshine Foods has accounts, and actually Triton has an account at Sunshine. So we could, for the month of September, go buy a bunch of stuff for Triton Public Schools. They put the amounts we owe on the Triton accounts. And then at the end of September, the end of the month, we go and we pay for everything at Sunshine. So anytime you see that word on account used in a transaction, it means that I'm going to pay for what I got, but not until the end of the month. The cool thing about accounting is that it's kind of just a word search. So there are different keywords that we'll see in transactions, and each of those keywords relate to a specific account title. So anytime in a transaction we would see the keywords of paid cash, we're trying to find a word in here that matches a specific account title. So below here, I'm just going to pop up our accounting equation with the specific account titles we already know. And I'm looking for a word that matches. And right now, the matching word is cash. So anytime you see the word paid cash, you're going to use the account cash. For the next one, same kind of thing. Anytime you see the word received cash, again, here's my match, cash and cash. So I'm going to use the account cash. Next up, I have transaction keywords of received on account. So I'm looking for words that match up here. I see received and account, so I'm actually going to use accounts receivable. And remember, the official title will have the company's name from who I'm supposed to be receiving money. Supplies matches right up with supplies. And then this insurance matches up with the account title of prepaid insurance. Next up, we have bought on account. So the only two account titles that have the word account in it are accounts receivable and accounts payable. The way I like to think about this is if I buy something, I have to pay for it. So if I see the transaction where it's bought on account, I'm going to use accounts payable, and I have to say which company do I have to pay. Next up, I have paid on account. Again, it's either going to be accounts receivable or accounts payable, but the second portion of this is paid. So I'm going to use accounts payable and list the specific company's name. And then the last transaction keyword you might come across is the owner. Now, nowhere on this chart of accounts do I see the word owner, but what I do see is name. And so the owner has a name, and the specific account title for that is name, comma, capital. So now that we've identified which transaction keywords match to which account's titles, we're going to actually practice what we would do in accounting. So here's a real life example of a transaction that you would receive, and what we would want to be doing is picking out the account keywords and matching those to two account titles so we can figure out what to do with that transaction. So when I read a transaction, I just go left to right, and as soon as I come upon an account keyword, I highlight it. So I'm going to pull up my chart of accounts, and I'm going to go left to right, and it says my first one that I can match up right away is cash. So I know I've got a cash account. And then my second keyword here is owner. So owners have names, and I'm going to go with name, comma, capital. So I would have my two account titles that affect this transaction are cash and goose, comma, capital. In transaction 2, it says paid cash on account to Amazon. Again, I'm going along and boom, here's an account title. Right away it's cash. And then I'm looking for more keywords, and the two keywords I found are paid and account, and those go together and they match up to accounts payable. And I need to give the company name. So it's cash and accounts payable Amazon. In transaction 3, it says paid cash for supplies. These match up perfectly under those asset accounts. I've got cash and I've got supplies. Transaction 4 says I've bought supplies on account from Target. So right away I see supplies and supplies. So I've got the account title of supplies. And I'm looking for more keywords here, and I see the word account and I see the word bought. These are the two keywords that together, remember, I think of when I buy something, I have to pay for it. So I'm going to use accounts payable. So I've got supplies and then accounts payable to Target. For my last transaction, I've got paid cash for insurance. So boom, right away I've got cash. And then the next word that matches up here is insurance, and that matches up to prepaid insurance. So I've got cash and prepaid insurance. So now that we've had practice identifying account keywords and matching those up with specific account titles, we're going to take a transaction and we're going to see what that looks like in the overall T account of the accounting equation and what we would do with that in terms of an accounting record. So in this example, our transaction said on August 1st, we received cash from owner Kim Park as an investment for $5,000. The very first thing I'm going to do is try to identify my two account titles from the keywords that I can place onto my accounting equation. So the first keyword I have that I would highlight here is cash, and that's an asset account. So I would write the specific account title down here under assets, and I would say, okay, I have a cash account title. The next keyword I came across was owner. Owner matches up with the specific account title of the name of the owner, comma, capital. So my name here is Kim Park, comma, capital, and that is the account type of owner's equity. So under owner's equity, I'm going to write Kim Park, comma, capital. Now what I need to do is determine what did I begin or start with for a balance in both of these account titles. Since this is our very first transaction, we're going to assume we started with $0 in every single account across the board. Finally, we're going to figure out, did I increase or did I decrease whatever my account title is? So right now I'm looking at cash, and if I receive cash, that means I'm getting money. So I'm going to increase my cash. If I look at the accounting equation, I have to keep this in balance. So if I know that cash is on the left side and I have a plus, I have to also have a plus on the right side so that they'll both equal the same thing. So I would have plus $5,000 of cash on the left, which means that me as an owner, or Kim Park as an owner, would also be worth $5,000 more. So whatever symbol you have on the left side has to be the same symbol on the right side of your accounting equation. So if I had a minus symbol on the left, I have to have a minus symbol on the right because they need to equal. Once I've figured out whether or not I'm adding or subtracting, I'm going to come up with a new balance. And at this point, it's just a math problem. So I'm going to take 0 plus 5,000, and I'm going to get 5,000 for the total on my left side. Then I'm going to get 0 plus 5,000, and I'm going to have 5,000 for my total on the right side. Again, my left side of assets equals my right side of my liabilities plus my owner's equity. So I know when I look at this that I am good and I have recorded this transaction correctly. Side note here on the bottom, it says if Kim is investing her own $5,000, should we look at her own personal records? The answer here is no. Kim is separate personal records from her business. That's that whole concept of business entity. So Kim's business is a completely separate entity than her personal records. We don't mix business and pleasure. The next two transactions deal with paying cash for supplies and paying cash for insurance. So I'm going to highlight my keywords here. I see a keyword of cash, I see a keyword of supplies, a keyword of cash, and a keyword of insurance. And I'm going to write the specific account titles underneath what type of account they are. So I already knew that cash was an asset, so I'll put it there. Supplies and prepaid insurance are also both assets, so they'll go on the asset side. And then I want to keep my Kim Park capital that I had used in the previous transaction because I might use it again. So I've got all my account titles listed, and the next thing I would do is I would carry over my balances. So in the last problem, we ended with $5,000 cash. We didn't use supplies or prepaid insurance, so we're going to assume they're starting right now at 0, and we had ended at $5,000 in Kim Park capital. So we've got our starting balances, and now we're going to determine what happens based on our transaction. So if I pay cash, I'm actually losing cash. It's going out of my pocket. I have less. So I'm going to subtract that $275 for cash. Now here's an example where I have two asset account types. They're on the same side of the accounting equation. So anytime we use two accounts that are on the same side of the accounting equation, we actually have to do the opposite to them because they're going to cancel each other out and stay in balance. So if I paid cash and cash paying is a minus, I need to have a plus for supplies, and I like to think of it as I'm gaining supplies, I'm getting it, so it would increase. So I'm going to have minus $275 in cash, I'm going to have plus $275 in supplies, and in that second transaction, nothing else happens. So when I go to balance this and I take 5,000 minus 275, I'm at 4,725. When I take 0 plus 275, I'm at 275. Nothing happened to prepaid insurance, so I can just carry that 0 down. And then on the right side, nothing happened to Kim Park Capital, so I can carry that down. Now the total of my right side is still $5,000. The total of my left side is I'm taking my cash, 4,725, I'm adding in my supplies, 275, and I'm getting $5,000. So my total on the left is still the same as my total on the right. I'm still equal. I'm good. In transaction number 3, when I'm paying cash for insurance, it's the same type of thing. I'm paying cash, so cash is going down. And if my prepaid insurance is on the same side, I'm doing the opposite. So if I'm subtracting cash, then I'm adding prepaid insurance. At this point, I'm doing a math problem, but I'm only doing a math problem for the last balance and the current transaction. So 4,725 minus 1,200 and then 0 plus 1,200. And there I've got my left side. Nothing happened to my right side, so I can carry those numbers down. If I take out my calculator and I add 3,525 plus 275 plus 1,200, I get 5,000. So my total on my left side is 5,000. And on my right side, if I take 0 plus 5,000, oh, shockingly, I get 5,000. So I've got my left side. It still equals my right side. I'm in balance, and I'm happy with my accounting equation. The last types of transactions we'll practice working on are transactions on account. So again, I'm going to look for the keywords that match up to an account title. So in this transaction number 4 on August 7th, it says I bought supplies on account from Supply Depot. So my first keyword I found was supplies, and then my next 2 keywords I saw were bought on account. Okay, and then in transaction 5, I see a keyword of cash, and then I see the keywords of paid on account. Remember, when I buy something, I have to pay for it. And if I have paid on account, both of those things match up with accounts payable. Accounts payable is a liability. So what we're going to do is we're going to keep all our account titles we used from before: cash, supplies, prepaid, insurance. And our new account title this time is accounts payable, specifically to Supply Depot. And then I'm still going to keep Kim Park Capital there because we had used her before. I'm going to carry my previous balance from the last slide over. And notice I'm starting with $0 in accounts payable because this is the first time I've seen that. When I buy supplies on account, I'm looking at the supplies as my keyword here. If I buy supplies, I'm getting more of something. So if I go and I buy toilet paper, I'm increasing my supply of toilet paper. So I'm going to have a plus under supplies on the left. And if my accounts payable is on the right side, I have to do the same thing. Now this is where I have students, they get really confused. They're like, how am I plussing when I'm paying? I like to think of it as you owe them more. So you have to pay them more, and that's why we have a plus there. Now we're just doing our math. So when we add 275 and 500, we're at 775. When we add 0 and 500, we're at 500. Again, if I bring out my calculator and I'm comparing the totals of my 2 sides, 3525 plus 775 plus 1200, my left side's at 5500. My right side should be 500 plus 5000, also at 5500. So I know I'm good with that. Transaction 5 said paid cash on account. This works the same way. My paid cash, so I'm going to lose cash. Cash is going to go down. If I have a negative on the left side of my accounting equation, I have to have a negative on the right side. So if I see accounts payable as my other keywords, I'm going down with that too. I owe them less because I'm paying off part of my bill. And then again, I'm doing my math, but I'm only focused on the previous balance and the current transaction. So here's my left side amounts after I do the math and my right side amounts. And then remember, we can do our final check to make sure left equals right. So 3225 plus 775 plus 1200, get 52 on the left, and then 200 plus 5000, and I get 5200 on the right, and I'm still in balance and I'm loving it.